Hi guys, welcome back with me. Before watching this video, don't forget to like, comment, share, and subscribe. Okay guys, I wanna read some article in investing.com by Geoffrey Smith. ECB raises key interest rate 75 bps to tame record inflation. The European Central Bank's (ECB) raised its three official interest rates by 75 basis points each, the biggest rate change ever, and signaled further hikes to come as it battles back to control record high inflation. The Frankfurt-based central bank raised its main deposit rate, which provides the effective basis for money market rates, to 0.75%, while the referencing rate rose to 1.25% and the overnight lending rate to 1.50%. Based on its current assessment over the next several meetings, the Board of Governors expect to raise interest rates further to dampen demand and keep the risk of changing inflation expectations continuing to rise. The ECB said a statement detailing its decision. Pricing pressures continue to intensify and spread across the economy, and inflation may pick up further in the near term. The move was above expectation ahead of the Governing Council meeting. Many analysts, including the bank's own economist Philip Lane, have warned that the Eurozone economy faces a growing possibility of a recession due to the war in Ukraine and, to a lesser extent, the pressure effects of pandemic-era stimulus. All their rates are still below current inflation rates, which hit a new era record of 9.1% in August. In her regular press conference following the meeting, ECB President Christine Lagarde said she expected the ECB to raise rates more than two but less than five more meetings in the future, but left the measures of the rate change open. He stressed that a 75 basis point move was not the norm, but said he didn't know at what level banks would be able to stop tightening. The euro, which was largely unchanged before the comments, was down about half% forward Eurozone government bonds yields, which are often a better indication of how the ECB's actions are being received. First, a market adjusted their medium-term forecast. However, the benchmark 10-year yields rose largely in tandem with one another, pointing the kind of widening spread that signal interest pressure on Eurozone financial markets. This clearly signals that the ECB is trying to rebuild its inflation-fighting credential after holding onto the interim inflation narrative for too long. Klaus Adam, professor of economics at Mannheim University and former ECB economist, said via Twitter, though that the ECB still needs a few more to return its policy stance to neutral. The bank currently updates its own forecasts for the next few years, and now sees inflation averaging 8.1% this year, up from its 6.8% forecast in June. At the same time, the bank revised down its forecast for economic growth over the next 2 years, although it pushed its forecast for the year to 3.1% from 2.8% 3 months ago. Okay guys, maybe that's all from me. Thanks for watching. Don't forget to like, comment, share, and subscribe.